So guess what? We have been saying non-stop that interest rates are going to fall in the US in December, when all of the market was saying, oh no, there's only a 25% chance of rates falling. Well, the Fed is going to reduce interest rates in December. We did say it on driving markets. We've kept our stance, and now on Friday the CME, which calls out prospect of rate cuts, is now calling for a 70% chance of a rate cut. Are they following driving markets? What's going on here? How come these analysts on Wall Street that are paid $500,000 a year plus don't know what's going on? How come we know what's going on and we're not paid $500,000 a year plus? Strange that, isn't it? Is there some sort of cooperation between the Fed, the Treasury and the Wall Street banks? Well, what is clear is that markets have been sold off on their lack of data and their lack of prospective rate cuts in December. Now that the prospect of rate cuts is rising, will markets bounce? The answer to that is, for me, in my opinion, for social media, yes, they will bounce. We're going to see an aggressive bounce, but also as the prospect of rates fall in December, you're going to see gold and silver and the precious metals move up. What about Bitcoin? What about the crypto sector? Well, that essentially follows the Nasdaq. And if there's going to be a leveling off of the sell-off and now buying upwards, there's going to be a risk-on attitude, and therefore you're going to have Bitcoin moving up probably to about 110. So my next call on Bitcoin, next level, 105 to 110. What about gold? What about silver? Well, my year-end target for gold is 5,000. Will we get there? Who knows? Year-end target for silver is 68. Will we get there? Who knows? And of course, I expect interest rates to be cut and money to be pumped in to the economy, and that will lead its way into asset price inflation, stocks moving higher, and overall you're going to have a further stock market boom. What about economic recession? When the Fed and the US Treasury are fully aware, this clip's not edited, I don't edit any clips, are fully aware the economy is on a downturn, and they know they have to pump money in and reduce cost of borrowing in order to get the economy going. Otherwise, they will go into a heavy recession. My forecast is that by mid-2026, we're going to go on to some sort of economic boom where markets go up, the economy recovers in the US, not so much in the UK, because Keir Starmer is a wanker and tosser, and then you're going to get markets moving higher and the economy becoming stronger. Catch you later.